Prime Minister Justin Trudeau is set to address the House of Commons this morning on the protests and blockades impeding rail traffic in this country. 13 days into the disruption, there have been growing calls for a resolution to the complicated situation. The Prime Minister emerged from his meeting with top cabinet officials yesterday, saying he wants to quickly and peacefully find a solution. Now, Via Rail today announced partial service between Ottawa and Quebec City will resume Thursday. Of course, the bigger question is how long this protest keeps up before it poses a real economic problem. Let's get some more perspective on that now. Kent Fellows is a research associate at the School of Public Policy at the University of Calgary, joining us from our bureau in Calgary. Kent, thanks very much for joining us. We appreciate it.
My pleasure.
Let's try to put some numbers on this story because we've been watching it all unfold. I think about the coronavirus, right? You don't know what the impact's going to be until a company like Apple comes out and says, well, we can't make our numbers. What can you tell us about what's playing out with the numbers behind this, the blockades?
So, I mean, we won't know for sure until the dust settles and StatCan is able to collect the GDP numbers and we can, sort of look retrospectively. But I've done some simulations with a computer model I have of the Canadian economy, and based on a shutdown of sort of 1 to 2 week length, you're probably looking at somewhere in the range of 60 to 160 million in lost GDP productivity per week. And so that's the spillover effect. That's all the other businesses that are trying to do business with the railways and using goods that are shipped between provinces as input goods or final production goods.
That's interesting. So a lot of times we look at certain products. There's been a lot of focus on things like propane, for example. But you're saying it's not just one product, it's just the need to do business and the fact that transportation is vital to doing business effectively.
Yeah, I mean, when you think about physical goods that you consume or that you buy as a household, so not services or product or like that, but physical goods, it's really hard to think of a good that we purchase in today's integrated Canadian economy that doesn't have some input that's traded between a province or internationally. There are very few goods that are produced 100% in the province or even in the city where they're being consumed. And so as these stoppages stop the flow of goods across the economy, you run out of the inputs to produce your output, or you run out of the things that you're trying to import from other provinces. It also hurts, obviously, on the export side, because that's the same story.
What could be, I mean, outside of where I mentioned we're waiting to hear more from the federal government on the road going ahead, but what are the kinds of things that businesses can be doing to try to deal with the situation as best as possible?
Well, if you're reacting to the situation now, you're probably reacting a little bit too late. We see most businesses in the Canadian economy and in global economies dealing with inventory management issues. And the idea is that they try to be prepared for temporary disruptions. You've got, in Canada in particular, you've got a winter storm in a region that could stop the flow of goods, so you have to deal with your supply chain management there. So I think right now what we're seeing is the economy kind of use those inventories as a shock absorber, right? So you're drawing down your inventories right now, hoping that new stock comes in. But as this persists even longer, those inventories are going to hit zero and you're going to start running out of goods. And at that point, you're looking at some other less attractive transportation modes. Maybe you're trying to shift some of those goods via the highway on trucks. For some smaller communities, particularly in the north, there may be some scope for airline transportation of some of these goods. But the key thing is all of those modes are more expensive than rail, so you end up adding to the cost. And that's where this lost GDP productivity thing goes in. You might actually have firms doing more revenue because the costs are higher, but you're not using the transportation network efficiently, and that means that those increased trade costs really are having an economic impact and damaging the economy.
And before we wrap up, Kent, just to go bigger picture, certainly hard to measure at this point, but a lot of people have been talking about what the view outside of Canada is on investing in Canada when your infrastructure is compromised. And let's not forget that even the current government, in its first term, really focused on infrastructure projects as something that will fuel the Canadian economy longer term. Well, that's great, but we have global partners in building that infrastructure, and you've got this growing chorus of, well, what does it mean to do business in Canada if it's very difficult and these issues aren't going away? When does that start to show up in the numbers?
So, I mean, I think we're already seeing this, and the current blockades are another piece of evidence to support that. That's not to say that volumes won't return to rail after the blockades, after that issue hopefully gets dealt with. But longer term, this is another piece of evidence for Canada that we really have to rethink some of this strategy on linear transportation infrastructure and what that looks like. You know, we're still using parts of the network that were developed at the end of not the last century, but the one before that. I mean, the CP mainline. So thinking further ahead, I think we need a new model. We're doing some research on that, but it's not an easy thing to deal with, and there's certainly a lot of questions in order to get this right.
All right, Kent, good to get your perspective on this developing story. Thanks so much. Kent Fellows, Associate Researcher for the School of Public Policy at the University of Calgary.